Hey guys, welcome back to another episode. In this video we will be going through our Connors 2-period RSI trading strategy in depth and how we use it in combination with price action. This is a rather aggressive short-term strategy designed to participate in an ongoing trend. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. We've based many of our trading strategies around the 2-period RSI, as we feel it is an incredibly powerful indicator when it comes to signaling overbought and oversold conditions by comparing the magnitude of recent gains to the magnitude of recent losses. Developed by Larry Connors, the 2-period RSI strategy is a fairly simple mean reversion trading strategy designed to buy or sell securities after a corrective period. Traders should look for buying opportunities when 2-period RSI moves below 10, which is considered deeply oversold. Conversely, traders can look for short selling opportunities when 2-period RSI moves above 90. This is a rather aggressive short-term strategy designed to participate in an ongoing trend. It is not designed to identify major tops or bottoms. The Relative Strength Index was first developed by J. Wells Wilder in the 1970s and can be found through this simple formula. The end result is a number ranging between 0 and 100, with oversold markets indicated as it reaches 0 and overbought indicated the closer the result is to 100. The majority of traders currently calculate the RSI using a 14-day period. We've found that when you decrease that time frame, the accuracy and results begin to really show significant improvement. We've built many of our trading models around the 2-period RSI based on this greater reliability, enabling us to swing trade with greater success. The 2-period RSI developed by Larry Connors is a mean reversion strategy which provides a short-term buy-sell signal. The 2-period relative strength index strategy is based on the principle that market prices return to a mean after significant highs or lows. The strategy, however, does not attempt to identify major tops or bottoms. It tries to identify overbought situations or short sell opportunities in a negative market and oversold situations or buy opportunities in a positive market. The strategy gives a probable buy signal when 2-period RSI goes below 10. Lower the better, which is regarded as highly oversold. Similarly, move above 90 generates sell signal. Of course, higher the better, which is seen as a highly overbought zone. Larry Connors' 2-period RSI trading strategy is a short-term mean reversion trading technique that looks for buying and selling opportunities within a well-defined trend. Connors' 2-period RSI trading strategy involves 4 steps. They are as follows. Step 1. Identify the long-term trend. The first step in the RSI 2-period trading strategy involves looking for the prevailing longer-term trend. Connors recommended using the 200-day simple moving average or SMA for the purpose. When prices are trading above the 200-day SMA, we consider the security to be in a long-term uptrend, and hence we trade from the long side only. Similarly, when prices are trading below the 200 SMA, we consider the security to be in a long-term downtrend, and hence we trade from the short side only. Step 2. Selecting RSI 2 thresholds. The second step involves choosing an RSI level to identify buying or selling opportunities within the bigger trend. Connors tested RSI levels between 0 and 10 for buying and between 90 and 100 for selling. Note that levels are based on closing prices. He found that returns were higher when buying on an RSI dip below 5 than on one below 10. In other words, the lower RSI dipped, the higher the returns on subsequent long positions. For short positions, the returns were higher when selling short on an RSI surge above 95 than on a surge above 90. In other words, the more short-term overbought the security, the greater the subsequent returns on a short position. Step 3. Timing the trade. The third step of the RSI 2-period trading strategy deals with the actual timing of the entries for the trades. This is the most important step since actual buying or selling is done in this step. Another important factor here is with regard to entry timing. The ideal buy setup takes place when the price is above 200 SMA but below 5 SMA, while the sell setup happens when the price is below 200 SMA but above 5 SMA. Traders can make position next opening candle. Step 4. Exiting the trade. Where are the stops? Connors does not advocate using stops. Yes, you're right, Connors does not advocate using stops. In his quantitative testing, which involved hundreds of thousands of trades, Connors found that stops actually hurt performance when it comes to stocks and stock indices. While the market does indeed have an upward drift, not using stops can result in outsized losses and large drawdowns. It is a risky proposition, but, then again, trading is a risky game. So, where are the stops? You need to decide for yourselves. But, however, in my opinion of view, no strategy can give you a 100% win ratio, so always be placing your stops at the appropriate areas. A stop-loss order helps control risk. A stop-loss gets us out of a trade at a predetermined price or loss amount. If you are getting stopped out too much, your strategy needs work, that is all. The stop-loss itself isn't the problem. Some strategies win 20% of the time, others win 73% of the time, and others 55%. All can be profitable. The point is that every trader will take losses or have their stop-loss hit. So, where are the stops? For long position, one of the simplest methods for placing a stop-loss order when buying is to put it below a swing low. A swing low occurs when the price falls and then bounces. It shows the price found support at that level. You want to trade in the direction of the trend. As you buy, the swing lows should be moving up. With short selling, as opposed to buying, a common stop-loss order falls just above a swing high. Like a swing low finding support at a bottom price level, a swing high finds resistance at an upper price level. This occurs when the price rises and then falls. You want to trade in the direction of the trend. When looking for short trades, the swing highs should be moving down. Take profits. There are several different ways to take profits when you are trading the market. It is going to come down to a lot of different reasons, including things such as time frame, but also other things such as trading psychology. One of the best ways to determine the optimal exit strategy is to pay attention to your emotions when you try different strategies. The one that you feel the most comfortable with will typically be the best. This is because you will be much more able to follow it and profit from it. Let's now take some examples to understand the Connors RSI 2 trading strategy better. In this 1-hour chart of Bitcoin, we can see the prices are trading above the 200 SMA, hence the longer-term trend is up, and trades are to be considered from the long side only. We go long as the 2-period RSI dipped below the 10 or 5 level oversold threshold limit. All the 3 trades produced nice trading profits. In this 1-hour chart of Tesla, we can see the prices are trading below the 200 SMA, hence the longer-term trend is down, and trades are to be considered from the short side only. We go short as the 2-period RSI surges above 90 or 95 overbought threshold limit. To conclude, we can say that Connors RSI 2 trading strategy is a very effective trading system and is suitable for aggressive short-term traders. However, there are some other time-tested and proven trading strategies which, when combined with the 2-period RSI strategy, can yield phenomenal trading results. Here are other examples of Larry Connors' 2-period RSI trading strategy. No strategy can give you a 100% win ratio, so always be placing your stops at the appropriate areas. For day trading purposes, the 2-period relative strength index strategy can be applied in a 30 or 60-minute time frame. But, however, higher time frame trading is more profitable. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.